Hi, Lee Phillips here. I'm an attorney. Don't hold that against me, okay? For a long time, I have been helping people with little businesses. And you kind of know that people with little businesses, some of them actually get wealthy. Why do business people get wealthy? Well, obviously, they have a business which is successful, but there's a hidden reason that people get wealthy with little businesses. And that is the taxes. Your little business is your most important tax shelter. And your accountant's never brought you in, put his arm around you and said, well, we need to teach you how to use your little business as a tax shelter. They never do that. And yet your business is your most important tax shelter. The reason is, it's what we call above the line. And you've got to look at another YouTube video to see what above the line, below the line accounting is. But it comes in above the line, which means that it either adds to or subtracts from your adjusted gross income. Basically, your taxable income. And if I can use the business to cut the taxable income, that gives me a tax benefit. And taxes are a big deal. People don't understand how big of a deal taxes are, but they're huge. And if I can cut your taxes a little bit, that makes a big difference in your overall wealth, your financial success. So your business can be used. It can be used as a deduction. Well, you can't deduct the business, but I can deduct things that are necessary and ordinary in the operation of the business. A cell phone, a computer, travel, all sorts of things become deductible to a business that are not deductible to an individual who just gets a W-2 by working for another company. So if you own the business, I can use the business to control my taxes, and it comes in above the line, lowers or raises my adjusted gross income. In this case, we're interested in lowering your adjusted gross income. You can set up retirement plans. For example, the 401k and the stuff have to be formed through a business. But all of the money that you put into the 401k from the business goes to lower the amount of money that you have, your adjusted gross income. Benefits, I can make your medical, your insurance, deductible. And when that's deductible, then that lowers your adjusted gross income, or the money that you would have to pay taxes on. So these things that a lot of people just pay for and don't get a benefit. You're a W-2 employee. Your insurance is through the company. Well, of course your insurance is through the company, but the company does pay a little bit of it. But they take out a big chunk of your wage to pay for the insurance, and that's not deductible to you. Whereas if it goes through a little company, it's all deductible to you. So the object is to make your taxable income as low as possible. If you don't have a business, basically there's not a lot you can do. You could be a real estate investor. People get rich in real estate, but that's another YouTube, isn't it? But other than that, if you're a teacher, you can buy supplies up to $250 on the third Tuesday of the month if it's a full moon. I used to be able to take off moving expenses. Can't do that anymore unless you're in the military or something like that. There's just basically nothing you can do above the line. Your medical deductions normally are below the line. That means it doesn't affect your adjusted gross income, your tax rate, all of that sort of stuff. Your charitable contributions, below the line. Most of the stuff that your financial planners deal with is all below the line because there's nothing they can do for you. And yet, if you are above the line in your business, if your investment is through your business, that sort of stuff, it all comes in above the line. And it lowers your taxes. So the trick in a little business is not only to make it successful by selling your goods or services or flipping your real estate or doing whatever it is. the name of the game in the little business is to use it as a tax shelter. And if you use it as a tax shelter, basically you get a double whammy out of it, because you get whatever profits you make in selling the goods and services. Additionally, you get to lower your income tax, so you get a double bite at the tax apple, or the wealth apple, I should say, which is pretty cool. Use your little business as a tax shelter. And I've actually got 10 tax tactics out that I talk to you about, things that you can do, mostly in your little business, to lower your adjusted gross income. And the object is to get that down. And the funny thing is, if you get it down, then you don't have a lot of phase outs of deductions and exemptions and all of that sort of stuff. So it works really good to get that down as far as you can get it. And my object, if you've got $300,000 in income, you'd better talk to me, because I think I can knock $100,000 or more off of your adjusted gross income. And well, if you've got a $400,000 income, that'll get you down below the Trump 20% tax rules, which is pretty cool. You get 20% of your business pass-through profit basically tax-free. That's another one. So your business is big deal.